Hemang Jani, good morning.
Morning, Nikunj.
How's it looking? How's it looking? How are markets looking?
Yeah, good morning, Nikunj. I lost your audio, if you could
अरे
give me
सिंपल
the
सवाल
question again, please.
सिंपल सवाल हाउ आर मार्केट्स लुकिंग इससे छोटा सवाल नहीं हो सकता.
That's right. The question is short, but nobody seems to have a proper answer at this point. So I think, Nikunj, we are in a phase of the market where there is a bit of uneasiness, despite the fact that we have already fallen quite a lot. You look at index, you look at stocks, so on and so forth. The incremental data points are turning positive, be it the regulatory support, be it crude price, even the flows into emerging markets, which has been the biggest worrying factor for a while, is getting better. But the only thing is that India is yet to really see that inflow come through. So maybe we'll have to see through this phase. I think the levels wise, we are surely getting better. Maybe, a little bit of more grind or a consolidation, but things should do better from here on.
Okay, that's the take on the market right now. But Hemang, the street still seems pretty divided, and it's almost a bull and a bear kind of tug of war when it comes to IT. Having said that, the stock prices are telling you a completely different story, indicating the market has completely tilted towards the bear side when it comes to Nifty IT. How would you approach the sector right now?
Well, Aisha, what is happening is that there was a bit of a positive view on IT, and I think mostly consensus positive view, saying that incremental deal flow has been good, IT firms are hiring, and as you see a bit of a strength come through in US economy, this discretionary spending will get better. But the recent interactions with the managements of companies, is indicating that while things were better, but it's not showing any meaningful progress from the point we were at probably a couple of months back. So there is a sense that you might see a bit of a lull before you see more clarity. And I do think that as a space, one should not commit, overweight position at this point of time. But some of the stocks which have corrected where the growth visibility is good, maybe Coforge, Persistent, I think these are the names that one can really go with at this point of time.
Hemang Jani, how come nobody's talking about this selling in IT? We are talking about selling in defense, we are talking about selling in construction, but LTI Mindtree down 33%, Emphasis down 30%, even TCS is down 23%. Hemang?
Yeah. So Nikunj, relatively just now this, sell-off in IT has started, and earlier, we had a little bit of stability come through in the IT, when this whole fall started somewhere, let's say in October, November, IT was relatively, holding out. But now, the sense which is coming in is that you are seeing a bit of a slowdown in discretionary spend. The US, where there was a consensus view that you will have a much better, data points, tax cuts, and increase in the discretionary spending, is not playing out that well. So versus the consensus expectations that the market was working with in terms of the IT spend, etc., there is a sense that you might see a bit of a disappointment, and which is why we are seeing this sell off. And if US remains a bit of a in a weak spot for some more time, you will see some more weakness come through in some of these IT names.
Okay, yeah, because the street is pretty divided when it comes to IT. And the Nifty IT, of course, has taken quite a bit of slam dunk. In the last 1 month alone, it's lost about 13.5%. But look how brokerages are coming out with such mixed signals. I mean, Morgan Stanley, here's what they have to say about IT. They've downgraded Infosys to an equal weight. The target price has been cut now to 1740, if we can just bring up the intraday graph of Infosys. The key trades are TCS over Infosys, Tech Mahindra over HCL Technologies, and Coforge over Emphasis. CLSA, on the other hand, has upgraded Infosys, and target price has been put at 1978. They're saying that the stock is now an outperform versus the earlier hold on the back of the recent correction in the stock price and largely unchanged on-ground demand scenario. So let's see which way actually the entire IT pack moves. But other than that, the one sector that sprung up very nicely yesterday was the entire realty pack. Along with that, of course, IndusInd Bank also made a bit of a bounce. We'll talk about that in just a bit. But Naresh, firstly, your thoughts on realty and whether it seems like the moves that we've seen this week so far, do they seem like they're going to see a follow through, from here onwards?
So for the last 2-3 weeks, we've seen some bit of a base formation in a lot of realty names. So if you look at a DLF, the stock has been trying to form a range around that 630 to 680 mark. You have Godrej Properties trying to make a range. A lot of these names have started making tight ranges on the lower end, indicating first step of the bottoming process for the short term. So many of these names are in a 5% band, and post that we could see a recovery. So DLF could again go back towards 740 odd levels. So a 5 to 10% bounce back could be possible. But the structure has been broken in a lot of these names, so one has to be selective out here.
Selective when it comes to realty. Hemang, what would you have to say about IndusInd Bank? Does it seem like day before sell-off was unwarranted? And would you read at all into that 4% bounce yesterday?
Aisha, I think it's a larger issue of the corporate governance and credibility more than the numbers or the valuations, because at regular intervals we've seen that some of the other surprises comes our way, and that would not give comfort, particularly in case of banks and financial services. The comfort or the credibility is far more critical. So I think, at least for now, the market would kind of try to avoid that. Wherever people are holding, maybe they are trying to kind of clean it out. The only thing is the stock has corrected so much, even previous quarter when this microfinance related, negative surprise came through, the stock lost about 20-25%. Now just, within a short span of maybe 1 or 2 days, it's down 25%. So it might kind of try to stabilize depending upon the short position or technical factors. But purely from a fundamental perspective, I think people would want to avoid IndusInd at this point.
Okay, there's another SIP data which we are talking about, and you have to realize that while the SIP data incrementally maybe at a 3-month low, I would still say bravo to Indian retail investors. Why? Because for the first time, Indian markets post-COVID, and we are talking about that SIP bulge really coming post-COVID. That's a large, sizable new investor who has moved into the market post-COVID. They are not really getting that churn of the tummy or churn in the tummy despite the crack in the market. Now, stocks are down, and the fall has been nothing short of very excruciating. But the SIP data, which is 26,500, this is the peak. And we're talking about the peak which the market saw in December when everything was like, going rara in the small and the mid cap space. The SIP flow, despite this brutal volatility and crack in the market, the maturity by Indian retail SIP investor, I think is absolutely heartwarming. Bravo to them, I would like to use the word, that they are not thinking QSQT, they are thinking in terms of real true blue financial planning. So the test of the market was that everyone said that market girega, SIP niche aayega, market girega, retail investor bhag jayega, market girega, small cap mein redemption aa jayega. Thank you retail investors, that's not happening. And that in a sense is a clear indication of how flows have moved. Hemang, few good things about Indian retail investor, please say.
Absolutely, Nikunj. I think what is very important is that what we had seen in earlier periods is that when you have such a big sell-off, there used to be a lot of lumpiness in the flows, and the mindset change has happened big time, both in terms of their investment into equities through SIP, through opening demat accounts, etc., etc. So I do think that this is a very good sign, and it brings an element of stability to the domestic mutual fund industry, which has been supporting the market for an extended period of time. I think for a large number of years, we have not seen the kind of sell-off that we have seen in the market, almost about $35 billion in a short span of about 4 to 5 months. So to withstand that kind of an onslaught, and at an index level, we are just down about 12, 13%. So that definitely says that the depth of the market is much better now. There is a much larger participation, and I do think that that brings a lot of comfort for a lot of investors.
Lots of other stocks which are going to be in focus, and BEL definitely is one such case in point. Consistent order inflows, and today there's another one. They've received 2,400 plus odd crore rupees worth of orders for their Ashwini radars from the Indian Air Force. So that's definitely one stock in the on the radar, and that should open positively perhaps. Hemang, time to revisit that entire defense theme, if not railways.
I do think, Aisha, that within the defense names, BEL and HL have actually stood out, at least in terms of the performance. So when you look at the quarterly, performance, there was almost about 40% kind of a growth. You had 12, 13% kind of an increase in the defense allocation in the budget. And given the geopolitics and the way things are shaping up, there is a sense that the defense spend will continue to increase. So I think some of these companies are relatively better placed, and I do think that it makes sense to buy into BEL or HL at this point of time also.
Right. Interglobe Aviation, that's the other one. It's a small investment, but they're looking at an investment of about 394 crore rupees in Interglobe Aviation Financial Services, IFSC. Interglobe, of course, has been one of those dream stocks and pretty much a monopoly when it comes to the listed universe. SpiceJet has gotten active only in the last 1 year or so. In the last 1 month alone, you've seen a 9.5% move coming in on Interglobe. Hemang, do you think Interglobe at even these prices needs to be one of those core portfolio stocks?
Absolutely, Aisha. I think, the way the current positioning of Interglobe is, plus I think the incremental triggers are that you have two new airports, which are going to be operational, one in Navi Mumbai and one in Noida. And that will bring additional traffic, and Indigo being the largest, player with a more than 60% kind of a market share will be the biggest beneficiary of that. The crude prices are relatively stable, and in terms of additional aircrafts also, they are doing much better than some of the incumbent players. So I do think that this has to be the allocation stock and could be one of the best performing stocks in 2025.
Where within the capital market theme do you find investable opportunities right now?
So Aisha, I think one should definitely stay away from the pure brokerage, even BSE, because of the way things are shaping up on the expiry day front. There is going to be less clarity about what sort of growth one is really looking at. But I do think that some of the AMC companies, because as we have all seen that the net inflow into mutual fund through SIP through lump sum investment is still continuing. So I do think that AMC would be a space where there is going to be comfort apart from the, of course, pure wealth plays, like 361 or Nuvama, which also have, by the way, corrected quite a lot. So I think one should really focus on the companies which are better placed in the current scenario.
All right, let's watch out for AMCs as well. But
Of course, Reliance is not only a pure play telecom story, but Reliance versus Bharti. What would you pick if it was just to be a telecom play?
So I think, Aisha, what we must understand is that in the last 1 year, while Reliance has been a big underperformer, Bharti has remained quite resilient and stable. So I think a large part of this pure play telecom with a lot of growth visibility is, to some extent already in the price. I think if you are a value investor and you look for a risk reward, definitely given the much attractive valuation of Reliance, one should go with that. Uh, at the same time, Bharti has been such a brilliant performer in the most difficult market conditions, and given the way things are, going, there is going to be a decent amount of incremental earnings come through from the ARPU and the savings on the capex, etc. So both are allocation stocks to me, but the approach would be different. Bharti would be more like a stock that you want to own because of the current uncertainty, and Reliance, pure value play, a much better risk reward.
All right, with this, would like to thank you, Hemang, for taking the time out and speaking with us this morning. Thank you so much.
If you like this video, then like, share and subscribe to ET Now.